Hey guys, it's Ed from EcclesiaLab.com, and in this video I'm going to be discussing buying at random. So, I speak a lot about buying at random in these videos, or to say it more correctly, buying arbitrarily. So, if you buy arbitrarily in the Forex market, for example, you will find that your win rate is about 50-50 if you have an even stop loss and take profit. This might look different in things like the stock market, for example. In the stock market, a lot of stocks throughout history usually go up. So if you buy at random in the stock market, you might actually find that you win more of the time than you lose. However, that still doesn't mean that it's a good strategy to just buy arbitrarily in the stock market. Anyway, in this video we're going to be discussing the Forex market, so let me show you what I mean about buying at random. So going over to our backtester here, we have dollar Canadian 5 minute, and we will do, how about we do 2020? We'll do a whole year of buying at random. Okay, so all of 2020. And over here, these are our only conditions. So if there's no open buy orders, you buy, and if there's no open sell orders, you sell. And I'll just make the stop loss and take profit 50 pips. Alright, so stop loss and take profit are 50 pips. If there's no open buy orders, you buy. If there's no open sell orders, you sell. Now, if I did not have at least that one condition, you would end up instantly buying an infinite amount of positions until you go broke. So you need to have at least that one condition to at least survive enough to test your strategy. And obviously buying arbitrarily is not a good strategy, but we'll see exactly the performance here from buying arbitrarily when I run. And you will hear me say a lot of times that a certain strategy is the same as buying at random or buying arbitrarily, and this is what I mean. There's a lot of indicators that you backtest, and you will find that actually they perform pretty much no different to this. So we will see the exact performance here over a year. Alright, that's done. It took about 2 minutes. Let's take a look at the detailed output. So as you can see, this is what buying arbitrarily looks like. Pretty much accomplishing nothing here, right? Buying and selling at the same time. Of course, if there was no buys, for example, or there was no sells, you can imagine the curve would just look like this, right? So, for example, if there was no sells, the curve would just look like the long profits curve here. So it would look just like this. Again, accomplishing absolutely nothing. And you'll see a lot of people backtest, 100 trades, and they'll say that the strategy is very good. But I mean, if you look at the start here, the very start of this year, so this would be 3 months, actually a little more. So we're going from the first to the fourth month, right? So just a little over a quarter of a year. And you can see it actually performed very well. Well, the buys did, probably because the market was going up the whole time. So if the market's going up the whole time and you have a strategy that's biased towards buying, then it's going to do well here, and you're going to think that it's a great strategy. And this might well have been the first 100 trades, but as time goes on, you can actually see that this is utter trash. It's the same as buying at random. And that's why it's so important to have enough data to backtest. So our software actually has enough data to show these figures, and it's accurate enough to backtest these figures. So there's nothing really available to the public that's like this, that's actually accurate and works, at least not anything that I have seen. So again, this is, however, a very simple concept. So if we look at the losses, we have 500 losses and 500 wins. Actually, exactly 498 losses and exactly 498 wins. So it's kind of funny here because the win rate is exactly 50%. So if we scroll down here, let's see. Yeah, I mean, there's nothing more to say. The win rate is 50%. And, you know, again, we use the 50 pip stop loss take profit. Okay, so if you like this video, like and comment below. You want to see more videos like this, subscribe and comment your ideas below. Let us know what you want to see next, and we'll see you next time.